Hi, this is Zach Meir with the Bulletin Board Heroes here at Vox Markets for Monday, the 16th of May. And tough conditions continue. Obviously, we've had the suspension of Eurasia mining, which obviously doesn't make things any easier for many of the punters. But starting off with Artemis, where there is just a sign of some bullish divergence here after the gap down that we had at the beginning of the month. So lower lows for May so far, but an uptrend line in the RSI window. And that could get the shares back to, I suppose, the best case scenario, up to 2.8 at the bottom of the gap. Otherwise, if things fizzle out, then it would just be 2.25 or 2.3p, which was the initial May low. But while we have no new lows below 2p, 2.8 pence the best on offer on a technical basis at Artemis. Situation which is slightly puzzling at the moment is Genflow, where after a good start, the shares have rolled over. They're within a falling trend channel from back in January. The good news, I suppose, if you are a bull, is that the RSI here is now, 5 out of 100, 7 out of 100, really, really oversold. There's a chance also that we'll hit the floor of the channel there around 6.25, and that will mark the low, accompanied by that very oversold RSI trace. Clearly, given that there's not much history here for the shares, there is a chance that the RSI is not quite as meaningful as it could be, but just a chance here of 6 to 6.25 maybe being the low on the latest run to the downside, especially given the way that the RSI is so low now. Basically below 10 is extremely oversold, and below 5 just sort of blows things out of the water. So let's see if Genflow can stage a bit of a revival. On to a stock which has not done that well either of late, and that is Gild Esports. The shares have its fans, but so far they've been disappointed. What you can see here is that the old low in March was 1.5 pence, and we're just trying to get back above that. Also trying to get back above the February resistance line. There is bullish divergence here, so the lower lows for May versus March have been only matched in terms of the lows in the RSI window, so that is a bullish divergence. You want to see 1.5 broken. 1.5 can be broken, then at least maybe we can get back to the 2 pence zone, which was basically early April resistance for the shares. And we're also assuming there will be no fresh lows below 1.25 in the meantime. Moving along to another relatively obscure situation, we've got Insig AI and answers on a postcard in terms of what the company actually does. But we've broken through the 50-day moving average last week and seem to be accelerating. What we'd like to see is an end-of-day close through 32 pence. We can get that. Then the shares may be on the road towards a 65 pence target at the top of that December broadening triangle. The reason for the relative enthusiasm, apart from the clear push through the 50-day line, is the way that we've got bullish divergence, quite a decent bullish divergence line there, double tested from November, and that could provide the momentum for a reasonable upside move, especially on the basis that, let's say, we're on a rising trend channel from back at the beginning of the year, which fits just about like that. So above 32 up to 65, as I said. Moving on to a stock which is equally obscure, but a bit of a blip to the upside at the start of the month. Here we've got Mineral and Financial, which I'm sure not many people are following, but we've got a bullish divergence line there. We retraced sharply from that peak at 18 pence, but what's interesting at the moment is the way that the 50 and 200-day moving averages are both rising, heading, I suppose, over the next 2-3 weeks into a golden cross. The implication is that while we're above the 50-day line at 10p, we could see a retest of that brief May 18 pence peak. Not a very certain situation there, but we do have the bullish divergence line and the moving averages that make things look a little better at the moment. On to NTOG, which seems to be gushing oil now, and we've seen the share price respond in kind today with a gap to the upside, just hitting the top of that rising trend channel from August, almost exactly, which is a plus point for the technicals. What we'd like to see if we're bullish of the stock is an end-of-day close through 0.8 or 0.82 to give us a promised 1.2 pence target, maybe by the end of next month. It'll be interesting to see whether the shares can hold above the gap at 0.7. Ideally, there's no end-of-day close back below that, ahead of a move through 0.8 and then up to 1.2 over the next 4 to 6 weeks. On to Powerhouse Energy, which has obviously not had a great run since November, but bit of action here on that extended uptrend line from back in, 2020. So the shares have seen that line there. That was around 1.7 pence. Above that, we could see the stock hit at the 50-day moving average at 2.6 pence. That's also the area of the old August support for the shares, so 2.6, 2.7. The best case scenario at the moment, while we are above 1.7 and rebounding off that very oversold RSI under, just around the 20 out of 100 level. On to Cinegen, which I shied away from, rather understandably, after the massive gap to the downside that we had in February. There have been signs that the shares are recovering with this uptrend line in the RSI window, which was bounced off at the end of last week. Current situation is that we'd like to see an end-of-day close above 39 pence, so that the shares can maybe partially fill the massive gap to the downside that we've seen. Difficult to work out exactly where they may go after 39 pence, but perhaps into the 60s, 70s is a best case scenario for the stock, and the upside valid, or at least the recovery valid, while we hold above recent resistance at 28 pence. But the key here is to close above 39 pence, and you can see that the shares are just trying at the moment to do that. On to Vast, which has had a bit of a roller coaster in the recent past. Nice signal today with the gap close, or if we close above 1.25 pence, it'd be a gap close buy signal, and we could head up to retest the 2 to 2.5 pence area, which was the initial May resistance. Upside valid while we're above the floor of the gap around 105. So 105, if you can handle that kind of risk reward, is the stop loss. Looking for 2 to 2.5 on Vast. Couple of stocks to go now. First one is Wishbone Gold, which had a bit of a flurry to the upside earlier in the month. And that's now starting to look quite healthy, in the sense that we've got this V-shaped bull flag here. That suggests that we should at least get 12 to 13 pence and post-September resistance initially, i.e. by the end of the month, and then hopefully up to 16, 17 pence at the July resistance line projection from last year. Things will start to look rather good if the 200-day moving average, currently flat, starts to rise, and we're into a golden cross for Wishbone Gold. Finishing off with Woodbois, which again had a nice flurry earlier in the month, but it's come back rather sharply. The good thing here is that we've had a golden cross buy signal already, and we've bounced off the 50-day line at 4.6 pence. Above that, I suppose the initial target resistance, previous resistance on the way up around 6 pence, and if we can clear that, then we're looking at a retest of 9 pence plus, maybe by the end of next month. But a nice risk-reward situation here, in the sense that while we're above 4.5, looking for the potential retest of the best levels. That's it from me today. More updates tomorrow.